Hey everybody, it's Mark Yegi. Welcome to another weekly stock market update. Today is the 28th of March, and it's a short week because tomorrow is Good Friday, going into an Easter weekend. So hopefully you're getting ready to have some good times with your friends, family, and just kind of maybe take it easy and enjoy the beautiful weekend that hopefully you're going to have, and do some praying and introspection and whatever it is that you celebrate on Easter weekend. And right now we're celebrating a very, very long green market. It's been 4 months now, at least almost 5 months, I think now. And the market's still green. So we are chugging away in this incredible, incredible market. Now, it may not feel like it to you, depending on what stock you're in, but the odds are that, things are going up if you are watching this market. So let's go into some of what we are looking at. Let me make sure I'm sharing the right screen here. I don't know if I am or not. Here, let's try this. I'm going to try it again. I don't know why I don't get this right all the time. But anyway, okay, so here we are. We are there's my disclaimer, and there is a green market going on. So you're seeing really 4 green lights, which means we are green. So that means you should be buying or owning or adding or pyramiding in or whatever it is for you. Be in the market right now, because you're not always going to have a chance to be in the market. So you got to be in good stocks too, but you got to be in the market, in my opinion. So NASDAQ is, look at that, record high. This week, it didn't quite make a record high. It made it last week, but it's right up, hovering around the top there. And there's nothing wrong with the NASDAQ. It's a short week. So you got to imagine that half the traders in New York City are out in the Hamptons enjoying the springtime or whatever. So they're not there adding a huge amount of volume. So you're seeing low volume across the board on this last day of the trading week. Now looking at the S&P 500, we are right up pushing those highs on the S&P 500, even today on a low volume day. The Dow Jones Industrial Average, same thing. We are up pushing those highs on low volume though. The New York Stock Exchange is finally at a brand new high, so it's leading everything else. And you know me, I like the New York Stock Exchange averages more than all the other ones because they're more broad. And you can see the volatility is, going down. And when volatility is going down, people are less afraid to be in the market. So you're seeing that. And then I wanted to show you this because, if I go on these vacations, or I go on trips a lot, as you may know if you follow me, and I take some pictures. But when I'm on these vacations or trips, I see pictures being taken everywhere, right? And I see selfies, and they're taking 10 selfies this way, and it's amazing how many pictures are taken. If you multiply by that, all the people that are not just, on a vacation or on a trip, but just in their regular everyday life, how many pictures get taken every day? And where do those pictures get stored? And how long are we going to store them? Forever, right? Where do they get stored? Well, they get stored on disk drives. They get stored on SSDs, solid state drives. They get stored on memory, right? Memory goes into server farms. Server farms have to keep running. And they, sometimes these server farms fail and some of these hard drives fail. But billions of pictures are taken every week in Facebook, right? And posted. And billions of pictures are put on Google Photos. Billions of pictures are taken on the Apple. They've got to go somewhere, right? They're not all just stored on our phones. They're going up to the clouds and they're getting stored. Well, the amount of data is exploding right now. Well, look what else is exploding. The disk drive index. And so this is a trend that AI is generating huge amounts of data. Just pictures, like I mentioned, huge amounts of data, music, videos, on and on. Data is exploding. And where are we going to put it all? And what about 50 years after we've added billions of pictures every week? 50 years from now, are we going to be able to access our pictures from 50 years ago? Probably. Well, those got to go somewhere. They're not just nowhere. Somebody's got to store them. This is why the disk drive index is going crazy. Look at that thing. That's one you want to be in, or wanted to be in for sure. All right, let's go through some of our widely held stocks that people ask me about. Starting off with Apple. That's not a pretty chart for sure. Apple looks to me like it's been a little sick, but it's Apple, right? They had the Department of Justice inquiry and antitrust lawsuit that was filed against them. And I have a feeling they'll come out in a couple of years settling that. But, that's a couple of years out. Meantime, they sell phones. They sell more iPads and subscriptions and things that go in your ear. And, they're developing things and creating things, and new phones are always coming out. So this is just a way to part a lot of people from their money. And so you can look at Apple's long-term chart over the years. It goes up and it goes down and it goes up and it goes down. And every time it goes down, people sell and new people come in and buy. And if you invested in Apple when, we had the early breakouts, you'd have made 100,000%. $10,000 would have turned into $10 million. So, we can't be freaking out when Apple goes down. And I understand it does go down and it kind of can scare you. But, if you look at it realistically, you zoom out, you go, is Apple going to go out of business? I don't think so. So Apple's got a low relative strength rating right now of, around 26, which means 75% of all the other companies are doing better in the S&P 500 or in the database. So in the S&P 500, actually. And, but this is just a way to get you out of your stock. And if you're weak, you get out of your stock. That's just what happens. It happens in all stocks, not just this one. I happen to like the stock, but it's a little bit out of favor on the street right now. You see a death cross where that red line crosses down through the black line. There's a lot of reasons to be scared for sure. If you think they're going out of business, you probably should sell Apple. Tesla, same thing. And to me, it looks like Tesla has been making lower lows, lower highs, and I'm an optimist on Tesla because as you know, I'm a big holder in it. They just opened up their full self-driving modules for a month-long test drive for anybody that owns a Tesla. And so they're opening that up, and I think people are going to fall in love with it. I sat in a Tesla and I drove without my hands on the wheel and without my feet on the pedals for miles, and it made the right decisions. It took lefts and rights and things like that. And once they hone this thing down, it is a profit center for Tesla. So I think that's bullish. We've been waiting for this full self-driving thing for a long time. Elon Musk is an optimist and he thinks things are going to come out sooner than later, but he does execute, right? He lands rockets on their own pad. Everybody used to let them explode into the atmosphere and, go into the ocean and all that, and maybe try to recover them for another use. But this guy's got them reused all the time. He's got it figured out. He's figured out electric cars. He's got the number 1 and number 3 vehicles in the world. Number 1 and number 3 best-selling cars in the world. On everybody that told him he couldn't do it, nobody wanted to drive and plug in on an EV. And people just keep buying the car. If you've ever sat in one, you know what I'm talking about. And then we've got trucks and semis and all kinds of amazing things that they're pulling off. And full self-driving is probably the hugest thing that's going to happen in the car business in the last 100 years. I'm telling you, it's a huge thing because they're going to license it to Ford. They're talking about they're licensing it to all these companies. Okay. Enough of the effusive praise of what Tesla's doing. The bottom line is sometimes a company can be executing, but the stock price doesn't execute. And normally what happens is like that volatility index that I show you every week, they come back together and they diverge, then they converge, and they diverge and converge. Right now, we are getting stock underperformance and company performance, right? They're lowering their prices. Margins are coming down a little bit, but Tesla keeps growing its amount of cars that it's selling, certainly when you compare it year over year. So is the company going to go out of business? I doubt it. They have very little debt, and they have the number 1 and number 3 cars, selling cars in the world. So, I don't think you bet against the guy, even though the government may be against him right now. All right, NVIDIA just doing wonderful things and consolidating up here at the top, which is kind of what I figured it would do. I figured it would go between 8 something and 1,000, somewhere in there before it makes a base or a platform. Like it's like a landing on a stairwell, right? You go up a few stairs, you got a landing, and then you go up a few more stairs. I think there's a lot to go in NVIDIA, but I don't know when it's going to happen. Certainly don't buy anything because I said it, because I'm usually really early, but you got to maybe put up with a little bit of pain. But NVIDIA, if you've been in this, has not been a pain trade. You remember that earlier in the year, I made the call that we were going to break out from 504, 505, and that's certainly what we did. We've almost got a double in NVIDIA. I'm not patting myself on the back. The company is amazing. They're executing on lots of things. AI is taking over, and AI is going to write its own code and make AI better. It's amazing what's happening. But it's also taking together that disk drive stuff that I was talking about a little bit earlier. It's also taking the computer peripheral devices up with it. And I'll show you that maybe in just a second. Supermicrocomputer, speaking of peripheral devices that feed into AI, you could see this one. We talked about it early January. At 357, I said, look, there's a long consolidation happening. It could break out. Lo and behold, a week later, there it is from 357 to it hit a high of 1,200. And now it's coming down. It's filling gaps, and it's kind of closing in on let's call it 850 to 1,250 range. And it's setting up that got kind of the landing pattern on a stairwell up again. I think there's a lot of volatility left in SMCI. I think it got a little bit extended. but the stock is performing extremely well, sitting just over $1,000 right now. AMD is having a hiccup in the last couple of weeks. So we had that big red candle you see up at the top at 227.30, a big reversal candle, hammer candle down. We gapped down the next day. We've come down to the 50-day moving average, which is where I think AMD stops and makes a little consolidation. So, I don't think any of these chip companies are going anywhere, but the world needs chips, and big time with AI and, the way that the chips are growing and that business is growing, and there's tons of innovation in that business as well. So you're seeing that, and then we can keep going. We'll just go here to On Semiconductor. Now, it's a semiconductor company that's a little bit out of favor. Company keeps doing okay, but it's just hovering around its 50-day moving average, kind of getting rid of the impatient people, getting in some of the new buyers that are going to try to take it from 80 to 120 again. But it's been fairly in a range for a while, between, let's call it, 60 and 90, something like that. And I suspect that one day it's going to break back up over the 50 and get over to that 200-day moving average. We'll see. For right now, we just kind of hang in there and hope the market continues to do what it's doing. Amazon, beautiful chart on Amazon. These are the kinds of charts that we like. They're chuggers, up off a gap on a big volume day, 117 million in volume a couple months ago. And this company just its stock continues to outperform. Microsoft, same thing. It's owner of OpenAI, which is the number one artificial intelligence consumer-facing product, and Microsoft is reaping the benefits of that. And you've seen a week of a light volume sell-off here, but nothing to worry about yet on Microsoft. Meta Platforms, kind of the same sell-off deal going on. They're getting into AI. They're trying to pilfer people from Google's AI division, which I think is funny. And they're up very similarly on a big gap up on big volume. It's all an AI play, and it's all technology. And these companies are all just continuing to grow because, first of all, they're first, and second of all, they're kind of the only game in town in a lot of respects. So that's going well. I wanted to show you something that I normally show just in my Insider Tips group and in my Mastermind group, but I'm going to show you what we're doing. I'm going to give you the top 10 industry groups for the week. Now, there's 197 industry groups, but the top 10 usually have the highest performing stocks because the stock gets just about 32, 33% of its performance from its industry. And so when an industry is going up, generally all the stocks in that industry go up, especially the leaders. And so you're seeing, look at this industry. This is interesting. Computer software, computer hardware. Well, there's apparel, electronics, right? Electronic semiconductor equipment, computer data storage. So 5 of the 10 are in the computer business, right? They're in the technology business. The other one, building. That means people are building things. That means we're not so afraid of these higher interest rates we've been getting. That means we're not so afraid of these unemployment rates and these recessionary things that people are talking about. There's building going on, building maintenance, building construction, building cement. Some apparel and shoes kind of crept in there. I don't know how that works, but things are going up, and people are also spending a little time at the movies. So there's leisure and movies and things to do in your free time. So that's telling me that there's a big, strong pull to continue to invest in the computer business and in AI. So with that, I'm going to leave you and say, listen, I hope you have a wonderful Easter. I hope you have a great time with your family. Forget about the market for a few days. I know it's hard sometimes if you're really into the market, but the market's going to do what it's going to do. You got to control the things that you can control and focus on that. Meantime, thanks for tuning in with me. If you're interested in our Insider Tips newsletter, it's free right now. And so you can go to cashflowmachine.io, cashflowmachine.io/tips. And you can join our Insider Tips newsletter, and we do all kinds of cool stuff. We do market updates like this. We also do stocks of the week. We do the industry sectors. We'll talk about, some of the stocks that you should be watching for, breakouts, all kinds of interesting things that give you ideas for your own research of what you might want to invest in down the road. Like I always say, this is education, not advice. It's information and fun. And so let's take it as that. Maybe it's the kickoff to some of your research, but certainly don't listen to some bald guy on the internet telling you what to buy and sell. I'm just start making suggestions and hoping that you can learn a couple things from me here and there. And if you can, great. Meantime, thank you for your time. Thanks for staying all the way to the end and listening. If you're watching this on YouTube or Rumble or wherever, give me a like, subscribe, notification so you get these as soon as they come out. But subscribe to me with Insider Tips, and I'll see you on the inside. Happy Easter, everybody. Take care. Bye.